Morning, I'm Daryl Jones, Director of Research at Hedgeye. Welcome to the macro show for September 1st, first day of the month. Had a little traffic challenge this morning. Apologies for being late, but we are ready to rock and roll. We'll go into overtime for a few minutes as well. So,
what is it about traffic and risk?
They both happen slowly, then all at once, especially in Fairfield County.
Especially with everyone living in Fairfield County. Now, isn't it amazing how real life works a lot like the Hedgeye process? Imagine I got up this morning and saying, well, technically my valuation model says that I should get to work in 17 minutes. Nah, try 47 minutes, okay? So again, nonlinearity, embrace the uncertainty. You know how to do that this morning. In the early look note, we take that right to the wood, thinking about whether or not we could have 50 all-time closing highs for the NASDAQ, of course. We have more than that for the S&P 500 already. All right, top three things this morning in the notebook is number one is going to be Asia, number two is going to be Europe, and then number three is going to be the volatility of things. And that's what I wake up to in the morning, not the valuation of things or the price targets of things, et cetera, et cetera. That's old wall. That's baggage. All right, Asia. Now, I got some problems, never mind some baggage. My top two shorts went straight up last night. I guess Japan more so than China. China, I think I can handle that 0.7% move there. But Japan, 1.3%, that'll leave a mark. So I'm going to have to restructure some of my puts on that, but because I thought it was going to go down overnight, and it didn't. And it didn't react to a down day. Imagine that. The S&P had a 0.1% down day, and Japan didn't go down on that. Now, again, I'm going to stay with it, of course, because Japan is in quad 4 deflation, and that is a relative short, obviously, to all of our U.S. shorts. But the other big signal was South Korea. South Korea for day two closed above trend. We wrote that number down. It hasn't changed day over day. Sometimes they do, sometimes they don't. 31.86 on the Kospi. So again, above that. Thankfully, I'd covered and stopped myself out of New Zealand, so that's gone. There was one divergence last night, which was Australia was down, albeit moderately. So again, I'm watching that because of we have Australia still tracking or nowcasting in quad 4 as well. Point number two this morning is Europe. So again, the offset is, first of all, we're gross long. Second of all, we're net long. Second of all, we have more longs on than we have shorts, because we always do. So again, we are long of Europe over Asia anyway. So we're getting pretty close to the cycle highs for Germany. So you see that chart there, Jonesy? I mean, that's it. There have only been a couple buying opportunities. It hasn't been uniquely American-like traffic on the merit today, or really stocks. You know, I mean, most hedge funds haven't been running around telling you that their top three European ideas, which currently are for us, would include Germany, the Dutch, and of course the Swiss. That's just really not been an idea of hedge funds.
And the the European data that's come in lately has been very quad 3, right?
Yeah.
We've had you've had some economic deceleration, but very mildly. The PMIs this morning for August decelerated a little from July, but still at a very high level. But yet what you have is the inflation really roaring back. So you have this kind of slight deceleration from a high level, but then very strong inflation.
And furthermore, the outlook for that inflation insulates the quad 2 in Q4 view for Europe.
Yeah.
So that's like this morning, in the top three things in the note, for those of you that get it, Macro Pro subs and institutional subscribers, the 6 a.m. note. If you want it, you can pay for it. I think it's super valuable. I mean, you can get ahead of everybody before they even wake up in the morning. What do you do when you get up in the morning? But again, what I said was, is it going to be quad 2 in Q4 in the USA? The probabilities continue to rise. Don't forget, if the 10-year yield's above 130, if the Russell 2000 is above 2252, which is now a trend, it was 2151. That is really, saying, hey, look at me, look at me, look at me. But Europe's already there. Okay, so that's the point. If you look at slide 20 in the current macro deck, you can see whether it's France, Germany, or Italy for that matter. And guess what else just went to quad 2 on a signal basis, but it had the 2 there anyway, Jonesy? Spain. Out! You're out. I'd been reducing it anyway. You saw that signal when we covered a bunch of stuff when people panicked a couple weeks ago, broadly in global equities. But that's the way it works. There's no need to be short Spain when the signal is bullish trend, which is as of this morning, and the upcoming quad is quad 2. Okay, that's a get it out of there. It's okay. We'll come back to you maybe, but probably not for months.
Yep.
Why would we do that? See how we do that? We go from bullish to bearish. It's okay. You can change your mind every day. This isn't like your kids, It's more like, maybe your spouse. You could change that if you would like. But generally speaking, people don't change their kids unless they're royal assholes, right? I mean, so again, or their kids are, So what we're doing here, these aren't kids. These aren't family members. These are not things you fall in love with. These are tickers. These are exposures that help you compound the returns on your hard-earned capital and avoid drawdowns. That's what we want to do. Save the capital we have from having a drawdown and compound returns by moving as the data does, not moving along some. I literally read it from a competitor the other day. He's like, if you don't get the narratives right, it's going to be harder. No. If you don't get the numbers right, they front run the narratives. Right? Point number 3 is the VIX. Now, what is your narrative at 14.09 on the VIX? Well, my narrative is that stocks go up, NASDAQ goes up. Okay, so that's a real important thing. I wasn't trying to be like abrasive about it. I'd never do such a thing. But this morning on 50 all-time closing highs, that would equate to the NASDAQ, being around 16, which we've obviously said is a rising probability type event. So this morning I used another guy. Obviously, I like cowboys like Jonesy from Alberta. But this morning in the early look, I used the Iron Cowboy. So again, our views are based on both the quad, again, if it's quad 2 or quad 3 for that matter, the major indices are going to make new highs, and that's obviously been dead right. So when I said 50, I wasn't trying to be abrasive or just try to tweak you or trigger you, maybe a little bit. I was trying to tell you that a dude, this guy, Canadian guy, Calgary, Albertan guy, comes to America, right? Comes to America. He does 50 Ironmans in 50 days in 50 states. Now you think I get up early in the morning and you do too. Now that is getting up in the morning, right? That's impressive.
That's putting in a shift.
That's putting. There were no. Well, I think he did have some beer. I mean, the guy at one point he said, I'd have like 3-6 hamburgers. He just needed more calories.
Yeah, consume calories. Yeah.
I mean, think about that. You wake up in the morning and every day you got to run a marathon. In addition to the other two things, you got to get in the water. This is actually I read this book over my vacay. Vacay's over. But I was like, wow, what would possess a guy to, what I love?
What would possess a guy to get up at 4:30 every day and do an economic marathon?
Yeah.
He's got to be crazy.
Yeah, well, unless you thought
for 12 years, an economic marathon every morning.
Well, at one point, I got to work with the Tom Brady of macro, but so I slept in though, right? Yeah. The fact of the matter is that getting up matters, right? Right there, chapter 1, getting up. This was day 17 in Kentucky, where he just goes through it. If you want to read what the real grind is, don't call what your kid did catching a ball epic, or or making a macro call kind of thunder and lightning. That's epic. Okay, that is impressive. Suffice to say, and we're learning all the time about people that are playing at the highest level. And again, what you find is that people that are playing at the highest level weren't always the people that you knew were going to play at the highest level. It takes a certain thing to get you up in the morning, a certain transparency, accountability, and trustworthiness that'll have other people follow you to do the same. He had, and actually that's an interesting part of the book, Jonesy. He would have, so he started wearing this cowboy hat because somebody gave him one. And he's like, and people are like, don't generally wear cowboy hats when they run marathons. So he started running. It was called the Iron. So wherever he showed up, they'd do the last 5K of the run with him.
Oh, wow.
So people would join him, and that's how he raised money for child obesity. It was actually a very good.
Oh, that's a great,
very good cause. So that is what it is. We continue to philanthropically give in the state of Connecticut, in particular to the Bridgeport Korea Bay Youth League is the biggest one that we've done. But again, amidst all of our faults and all the quad shifts and all the noise, again, you got to give back. You just absolutely do. We're going to give back part, obviously, of what you give us, and thank you for your time and attention to the process. 45.58, Jonesy Buds, higher all-time high. Look at that. Higher all-time high, J Buds in America. I got to write it down one more time. Again, and again, and again, right? Again, a great American hockey coach. That's what he would say. And he was getting his players battle tested and ready, and they beat the Russians indeed, right?
Yep.
They called that the miracle. What you're doing every day is not a miracle. It's just hard work. And you got to pay attention every day. If you don't want to pay attention every day, don't. But the people that do are going to do a little bit better, maybe a lot better. And that is the name of the game. What else we got going on for you this morning? If you look at volume yesterday, it's been a nothing burger, and it was again yesterday, up 1% versus the prior day on the down day, but it was barely a down day. You did have 7 out of 11 sectors down, but it was only the second down day, I believe, in 7 trading days. So again, with the 5 up days being all-time highs Okay, so if you look at the bongo board yesterday, one thing that was not down, which was backstopped by the data, Jonesy, was real estate. Now, real estate made another new high, up 0.59%, up 30 for the year. That's a good example of something that you were long in quad 2, deep quad 2 in particular, loves real estate. And then as you go to quad 3, we gave you all the back tests and the changes relative to what the prior model said, and said, no, you stay with this one. And that's a great example of not using a static back test or be model-based without the signal front-running that and the dynamism embedded therein. So again, we've gone through this multiple times. I'm not going to do that again this morning. But again, the components of the XLRE are basically inflation components. So again, a big obvious one would be public storage, PSA, which has been one of Rob Simone's favorite ideas, bottom up, which is obviously in the top 10 of that ETF as well. Cross asset class vol, nothing's changed. Move index was pretty much flat. So again, you learn a lot from, I should say high yield was dead flat with the prior day. So when you have a down day in stocks, you know, what did the bond market do, what did the currency market do, and what did high yield spreads do? Nothing. Nothing, particularly nothing of that changed. It was Brownian motion. So you maintain your position and you buy something that you sold higher. For me, it was Axon. Remember that? I gave you my super duper 5 picks. And then it wasn't on yesterday, and some people were like, oh, you took it off. And then at into the close, I bought it back. I bought more back. Yeah. So if you start selling because it's not on the page for me, I like that, right? So this is kind of like this thing, which is like Axon, which wasn't my top 5. It went straight up, so I took it down, and now yesterday into the close, you take it up. You know, that's what you want. That's
what about GSL? What have you done with that baby?
Well, you want some picks. You want some. You getting. We're running a little late today, and you want to get into the stock picks this early in the morning into the macro show.
We'll go into overtime though.
Let me see where GSL fits in my ranks in my trading account. Let's see. GSL. Let's rank the portfolio right here. 1, 2, 3, 4, 5, 6, 8.
Oh, okay.
Number 8.
That's not bad.
Yeah. U.S. Steel moved to number 2 yesterday. That was interesting. And Axon moved back in the top 5. Anyway, and that notwithstanding, you're not here for picks. You're here for process. And if I get the picks bloody well right, that's just great. You know, if you get the quads and the signals right, you're going to get more picks right. Okay, so again, you know, one comes before the other. Right. So again, that's important to acknowledge and understand. On Asia, the roundup is what I already gave to you. On Europe, I already did that too. By the way, there is a significant move here in Spain, now up over 2% this morning, Jonesy, and back to bullish trend on the signal. We already highlighted that. Russia continues to be awesome because oil is, and oil's volatility this morning is a big move. Now, this is an important chart, Jonesy, so pay attention to this one. This is the 3rd time that oil vol has broken down towards cycle lows. So again, that could easily give you into the 70s. We have it at 71.72 WTI if you get back to the cycle lows. So it's not just volatility in the U.S. equity space. It's volatility in one of the front runners of inflation, which is the oil space. So again,
it's actually interesting. It sort of reminds me of equity volatility. You know, we've been saying for a long time it's going to make lower highs, but it has these episodic periods of spiking. But oil is going the same direction. You know, lower highs, lower lows.
Yeah.
And oil looks like it's sort of behind it, but kind of on this path to lower lows.
Yeah, I mean, the volatility is, and the price. I mean, don't forget that, you know, the thralls of Quad 2 when it really broke out, November, December, when when it was like, that's the most money I've made in a long time. Yeah. That's when energy really took off. And it wasn't just like oil and gas, oil names, it was gas names. Range Resources should do quite well this morning, by the way. Natural gas is ripping the eyelids off people that think that there's no inflation. The inflation's in your account. That's the point, right? So you can see that. But oil, Jonesy, is up 43% this year. It's not like it's deflating. Yeah. You know, it may not be at the highs. I said it could go to 75. It did, okay? I said that way before it went to 75 because the model did. And then people are like, well, you said it could go to 76.06. Go away. Check your baggage. Come back after your attitude problem is fixed. Yeah. It's just what it is, right? So again, and energy has dropped down the list. By the way, it's 5th now. If I have 5 ETFs that I can buy in the USA, it's 5th. You know, industrials just jumped ahead of it. Why? Industrials and utilities this morning. Look at the implied vol table. Have massive implied vol premiums. Look at this, 108. And yes, I said frick, right? Even though kids went to school today, I've cleaned up the language and cleaned up your visual on that. 108%. You know, the last time we saw 100 was 102 on the Qs, and that was when you should have bought the shit out of Apple. Shite, shit, and now frick. Frick and frack, dis and dat. Dis and dat. You like dis and dat.
They're beauties.
We coach at dis and dat. Two guys from Montreal or de Quebec, eh?
Yeah.
Good guys, dis and dat. This and that, you look at this and that, this shit goes straight up. Look at the nat gas one more time. The natural gas, now, the natural gas, this is in the early look. The natural gas, and then go back to the implied vol table. Forget 108, okay? Look where natural gas's implied vol is. Holy hyena, man. This, that, whatever. The hyena. The crazy. You make me crazy, right? The short sellers are in the natural gas. Look at that. Look at the freaking positioning coming into this. On July 22nd, Macro Pro subscribers got two new tickers. One was natural gas and one was tech. Now, if you can't make money doing that in August, I probably can't help you, right? If you're still messed up about, he said 76.06 because that was the top of the range of WTI. Like, this natural gas position has been the biggest net short position on an absolute basis in all of macro for months. And now you get the voila, right? So perpetuating the inflation is born out of the notion that it's transitory. If it is transitory, pal, why don't you own puts on natural gas, or have you? Why have you not been short my range resources? Because you wouldn't have a position with skin in the game on your transitory view. Of course not.
All right, ready for some questions? You got a few more things.
A couple things. Copper. People are going to be like, oh, disconfirming evidence. The Chinese sold 30,000 fucking tons of it this morning. And they told you they were going to do it on what day? So you're looking at the screen, and it's like, holy crow, that thing's back at the trade line. 30,000 tons, okay? And they sold more zinc in tons than that, okay? So again, they're trying to tone it down because the Chinese have terrible economic data. Chinese manufacturing PMI dove into contraction today or overnight on the Caixin number, whatever you call it.
Oh, yeah.
The Caxin number, Caixin or Caxin, whatever.
Yeah.
Who cares what the name is? It's the direction of the thing. And yesterday it was the consumer number,
the services
number. Terrible looking things. 10-year yield 123 to 128. Higher low. Higher low. Quad 3 downward sloping should be the bond yield. But you will, again, quad 2 is going to be the question you ask. And again, I'm more interested in the Iron Cowboy. If the NASDAQ makes 50 all-time highs, I don't give a shit if it's quad 2 or quad 3, right? On that one, because I'm long it in both. What I would care on, Jonesy, is utilities and gold, because they do not like quad 2. And of course, utilities have corrected with this probability rising, so we'll see if we're right about that. But this morning's employment number on ADP maybe gets me paid on the utility side, and I'll sell some on green. Good spot to take some questions. By the way, it's still euro bullish against the dollar. That was new yesterday, but just to repeat what's obviously on your page. And Ethereum's making higher highs. Ethereum's been better than Bitcoin, both in signaling terms and in terms of how I've sized it.
Okay. So the top question hit on XLU and XLI, so we'll skip that. We hit on gold. I'm going to go to Bob in Boston. This is a little more of a process question. Keith, how do you evaluate signal strength? Is it the amount of upside versus downside in the risk range, or is there more to it? And, you've been what you've been doing recently, which I add to the Macro Pro note, is kind of ranked signal strength for macro ETFs.
Yep.
So I guess the question is, how does something get to the top? How does something move to the bottom? Like, what are the big shifts within the ranking strength?
Well, just to clarify one thing about what you said, what you send people is the size of my position that day. That doesn't mean it's got higher signal strength. It just means I went bigger.
Gotcha.
Which generally can mean that the thing is, which generally means that the thing has strong signal strength, A, which is correct, but B, it went down towards the low end of the range.
Yep.
Right. By definition, the strongest signal has been REITs because it just made a new high, and tech didn't. So signal strength is really important. The reason why it's not a really easy one. That's an easy one to answer, and it's taken me years. I mean, to basically communicate what I've always done, and that doesn't matter. And I'm always trying to get better too. But when you look at TM signal strength, okay, that's that's a legal thing. When you have a trademark or patent in America, those are things that you earn through use and proof, right? I don't know why so many people are mad about that. This is one of the best parts about America versus Afghanistan is called the rule of law. Like, I think it's cool to have innovators like Thomas Edison and Hedgeye. It's cool, right? I'm not Thomas Edison. Like, look, okay, so signal strength, when we look at the strength of the thing. Okay, signal strength, A, is bullish trend, okay? B, it's bullish trade. Because not all trends are bullish trade and trend. So it's bullish trade and trend, which also implies that it's a bullish formation. It's bullish on our longest term duration as well, which is the tail. So it's a bullish formation, bullish trade, trend, and tail. And most importantly, volatility is signaling lower lows. The vol of all determines really what the higher highs are implying. So if the risk range has higher highs in it, it's got, if ABC is true, those have the strongest signal strength. That's why energy has the weakest of the 5. If you have 5 bullish trends, which I just rattled off, which include obviously tech, REITs, utilities, industrials, and energy. The problem with energy, Jonesy, is that it's still bearish trade.
Yep. It's
bullish trend. But that's why I showed you the front runner for that. If we get oil vol to go to new cycle lows and oil goes to 71, then it's energy is like a day away from going back to bullish trade, trend, and tail.
Okay. Okay, this is a crypto question, and I'm not sure how much you look at altcoins, but this is Ryan in Saskatoon. With crypto being bullish in quad 3 and quad 2, how would you weight your portfolio between Bitcoin, Ethereum, and altcoins? So altcoins could be kind of anything under the sun. I don't know how far you go down. When you invest in crypto, do you kind of stick with the primary assets, or do you go sort of into the weeds? And
we've gone into the weeds. We bought a crypto fantasy football asset.
Well, yeah, and we had. I was talking to Michael Bloom, our president, last night. We had this great dinner.
But that's the only altcoin exposure I personally have, by the way. I don't have anything other than that.
We had to actually buy one altcoin to then buy the other altcoin. So we got into the weeds on that one. But yeah, I think you have to be careful, and how far you go down. But in quad 2, they probably all do well.
Here's a good. I mean, they all do well, so that's a good point. Who was it? Ryan.
Yep.
You gotta love. Hey, Ryan from Saskatoon.
It's Saskatoon and Alberta's birthday.
Frickin' right.
Or sorry, Saskatchewan and Alberta's birthday.
Sask. All you Sask guys, Ludsey, all you guys, Gus, all the guys we know. They're all guys because we only played hockey with guys. I coach girls. It's okay. Don't cancel. Today, I believe it's 1905, is when the Albertans and the Sask guys and gals entered the Confederation of Canada.
Yep.
Now that's knowledge, right? Now here's some more knowledge for you, Brent. So one, when we're long crypto, okay? Let's color this up the right way so maxis don't get affected or impacted by this viscerally or emotionally or otherwise. So we are long of the crypto. Crypto, let's think about it this way. This is how I've thought about it, okay? This is how I've thought about it. There are two cryptos that I would size the biggest if I'm bullish on crypto. Why? Because they're the ones that have the most liquidity and the ones that I model most vociferously. Vociferously? Yes, vociferously. So because I have it's not unlike everything else I do. Again, I'm always going to have Qs bigger than something like a stock pick because Qs are big, liquid, I model it every day, and my stock picks are smaller. That's just the way that I do it. So I've chosen to make ETH, whether it be against my dollars on the crypto account or the ETF. Those are my two biggest. Everybody knows that. Followed by Bitcoin. And now Jonesy Buds gets me into this alts shit, right? Alts. That's the sizing. This is way more speculative than this. I can't see this every day. I think we're going to see this this thing. What's it called again? I don't even know what to see. See how I do things? I don't even care. Like what the...
Well, the coin is actually called SCOR, score.
Score.
But it's it's in... we bought a fantasy football franchise with score coins. And it's its whole environment where they have their own currency or token. So.
Yeah, I don't know anything about that damn score coin, but I know that Jonesy likes it, and I trust him. I don't have time to do work on score coins. I got other shit to do, right? I mean, so some people wake up in the morning like they got to know everything about Dogecoin. What do you really know about that? What do I really know about this? I can tell you that it's not an inconsequential amount of capital that we have in that. If we lose it, it's going to hurt. But it's going to hurt less than if we lose. Again, if this just goes away, we've defined what the downside is. But we also know what the upside is, which is a lot. Okay. So again, when you think about more speculative plays in crypto, put less capital to work. Your upside in percentage returns is higher because the betas are higher, liquidity is lower, et cetera, et cetera. So again, you don't think of it any differently than the way you think of all asset classes and managing them, risk-adjusted returns relative to their relative volatilities.
Okay, some questions about your conversation with Rickards yesterday and what sort of takeaways you had. It's always interesting and informing to get an update from him. Anything noteworthy that came out of that conversation?
And we did get, I think his name's Jack Monroe, a very astute observer of the Hedgeye process, pays attention to everything a lot of what I say, because I know that he's very quick to say stuff on Twitter, and I appreciate that, Jack. And he's like, hey, look, like it sounded like you agreed with him on deflation, what up? I'm like, no. That's not what you should have heard. You should have heard me say stagflation multiple times, first of all. Secondly, on deflation, that's a Q2 2022 thing, Jack. So it's a classic example of duration mismatch. So when you get somebody like Rickards, who's a longer term deflation outlook, it is what it is. That wouldn't have been a good thing to be positioned for, to be very clear, against being long inflation for the whole cycle that we've been long it. And it doesn't mean anything. It doesn't mean like, oh, they disagree. It's not what this game's about. I have these conversations with Jim Rickards, to Jonesy's point, to learn a lot. That guy could teach you a lot if you have the ability to listen and not be tweaked relative to your current positioning and or whatever your political bias is. Yeah. The minute he starts talking Republicans, some people are, hey, can't handle it, can't. Like, why are you that way? Don't be that way. Don't be that way. Imagine hockey players on a bench reacted that way, like because their parents have a certain political view. As soon as I say something, it's just stop it. Listen to what he's saying. So what I heard, which may or may not be construed as a political comment, was actually, now that I have it on the board, the most important thing in my notebook, you can see it right here. It's like right here. It says, under my ETH, it says cycle highs, higher highs versus Afghan ? Rickards USD. Why did I write that down? That's the one thing that he made me think about that is going to either augment my positioning or not in the most important thing, or one of the top things in macro, which is the direction of the dollar, right? So what this is signaling to me is that, and he said this, so if you put in the Afghanistan plug, he said, look, this is an explicit or implicit devaluation of the dollar in the eyes of a certain community of people that don't trust the Americans anymore, and the Americans don't trust themselves. Something like that. And he was highlighting, I believe, and I did write this guy's name, Eric Prince's views on geopolitics. Yeah. And I was like, that makes sense. You can tell me a story about anything. I'm willing to believe it if the signal does. And that sounds like a pretty plausible one to me. It doesn't mean that I have to believe or disbelieve in some political thing. But the dollar's credibility has certainly lost something on two fronts. And it's not just Afghanistan. I think anybody who's objective would say that, yeah, they did. Even if you're Biden's buddy or whatever, his son, whatever, he doesn't have, anyway, I stopped. So you didn't cancel when I was going to say what I really think about his son. Because it doesn't matter. Right? But the dollar lost credibility in Afghanistan relative to crypto, relative to the euro, and it lost credibility from Powell. Two big arenas, right? Geopolitical and monetary policy.
Okay, we're gonna.
And I thought Rickards, by the way, did a great job reminding you of why U.S. monetary policy has no credibility. Yep. They have no credibility at all in forecasting, nowcasting, or telling you what the future is going to be or could be or otherwise.
Okay, we're going to dig into tech a little here. This is Jimmy from Philly. With Amazon now back to bullish trade,
bullish trend,
sorry. Are the triple Qs, triple Qs more attractive than XLK, or how do you think about weighting within tech, or is there a big signal difference?
One, Amazon is at the top end of its range, so you want to back that up a bit. It just broadens. Yeah. So what it means is that the broadening of the rally in the NASDAQ, again, I don't just randomly write, could the NASDAQ make 50 all-time highs? I mean, there's a lot going on, which thank you for the call out, and it's bullish trend today for Amazon after going neutral. That's the sequence of similar sets. Is that you get, okay, market's looking ahead to Q4 now because we're in the last month of Q3. And it's like, I want to take a peek at quad 2 again. I'm going to start to rip some of these meme stocks. I'm going to start to take a peek at the things that haven't worked, Netflix and Amazon, and they ripped real quick back through those like shit through a goose, just right there, or the other way, right, for the shorts, right? But you're like, wow, that happened pretty quick. I still like Amazon. Like a lot of people would have said that qualitatively or otherwise. So yeah, it just means that there's a broadening, which means that there's again, corroborated by a falling to lower lows of volatility. When volatility hits lower lows, there is nothing more bullish than that. That's why bull markets end there. They don't end on anybody's view. And again, I like Mike Wilson. It's not anything about that. Our asset management partners working with their asset management partners, they're all going to be better. Morgan Stanley's going to be better by taking the Hedgeye view and Mike's view, because Mike's got some good views, but I have a damn good process. And that's the process that we want you to focus on, is through the lens of volatility, not valuation or percentage corrections. Sorry, Mike, but over the course of time, God willing, I have more, I'm going to beat you big time using the vol of all over those types of models.
Okay, great. We're going to wrap it up there. Thanks, everybody, for tuning in. Back at it tomorrow morning at 9 a.m. Take care.